My name is Benjamin Poole, and when I was 23, I gave my life savings to a broker who lost it all. But this taught me an invaluable lesson. I needed to educate myself to make my own financial decisions. Fast forward 20 years, I am no longer living paycheck to paycheck, and I want to share everything I've learned with you. Welcome to Financially Fit.
Hey guys, welcome to Financially Fit. My name is Lawton Ho, and I'm joined by
Benjamin Poole.
And he's the guy you just saw in the intro.
That's right, that's me.
So, like always, this is going to be a Q&A. You can go ahead and leave your questions in the chat. I'm going to be watching them and reading them. But if you want your questions prioritized, what can they do?
They can go to verifiedinvesting.com, sign up for a free account, go to Financially Fit. Lawton puts out a post every Tuesday around 11 o'clock, and you can submit your questions there.
Yep, in our member dashboard, which is free to sign up. So that's where I'm going to be picking the questions first from. But you ready to jump into it?
Yeah, let's go.
Okay, so a lot of questions about Nvidia tomorrow, earnings tomorrow.
Nvidia earnings?
Yeah.
Okay,
What's that
I
about?
guess they're having earnings tomorrow.
So I'm going to read you a two-parter.
Okay.
These are two different questions from two different people, but I think the answer will be similar.
Okay.
Paige on our member dashboard says, I understand that Nvidia is coming out on Wednesday after the bell. When are you going to short-term trade Nvidia this week, if you are? The second question, okay, says, hello, this is from Taylor. What are your thoughts on how the market reacts to Nvidia earnings? So that's like a twofer.
Okay, well, let's go ahead and just take a look at the Nvidia chart first. What I can say is you've had a huge run off of the highs and then the lows. So I've got these lines pulled up in my charts already. So let me get this out of the way. All right. What I can say is right now you've had this, you've got a defined top. So as long as this top stays in place, then we're okay. You had this nice drawdown right here, dropped about 40%, and then has since rallied off of those lows right here. We are putting in bullish consolidation. So you've got this green bar candle, and then you got 1, 2, 3, 4, 5, 6 bars inside. So tomorrow will be the 7th bar inside this candle, which would make this more of a mature pattern. And so probabilities actually do dictate that there would be an upside move. However, if Nvidia fails to live up to the expectations, this bullish consolidation, once it breaks, it will have extremely negative effects for the stock and eventually, and also the stock market. So if Nvidia goes down, the rest of the stock market is going to continue to follow. So that's what I think. Right on earnings, I think initially what's going to happen, and this is just my prediction, it's going to come down a little bit right here, probably go down to 115 area. And then if it beats earnings, I think it'll go back up probably to the 135 level, and then this double top. It will take something to actually push through that, but if it beats earnings, if it's still doing 70% on its margins, then it can move higher. So I don't know what it's going to do. I just know that it's a volatility. The rest of the market is going to follow what Nvidia does.
Cool. And I'm actually going to be standing here so I can read the chat.
Oh, okay.
So we'll be talking like this.
All right, sounds good. Well, I'll just stay over here then.
Yep, you could. Or you could stay. You can come closer if you want.
No, that's all right.
All right. You're lost. Whatever. I don't want you to. Anyways. Okay, next question comes from Dom. This is a question about our live day trading room. It says, hi guys, can you please clarify what you mean by 1/10 of portfolio? Can you give a specific example of a trade if you had a hypothetical 30K portfolio? I really struggle with position sizes. Thanks, and keep up the good work.
Okay, so here's what I'm going to do. Let's say you have a $30,000 account. So when we say 10% of our portfolio, that's what we recommend, or that's what we're doing. Each individual investor is going to have their own risk tolerance levels. And so when we say 1/10, that means if we had a $30,000 account, our first entry into a stock is $3,000. So if a stock was at, like, say, Chipotle was at $3,000, well, we have a $30,000 account. We would go in with one share short, okay? And then you would add $3,000 if it moved against you. And that's how you would do it, up to your full portfolio size. So 1/10 is 1/10 of the $30,000. And again, this is how we're doing it, but doesn't mean that you have to do that if it's outside of your comfort zone, right? And the reason that we're doing 1/10 is just because it allows us to give you an idea of what we're doing, and we can be into 4 full positions at one time. So
all right,
that's it.
Cool. And that makes sense. I see Malcolm also commented on that, saying exactly what you said. Yeah, you just wouldn't be able to hold overnight if you use 4-to-1 leverage.
If you got into 4 full positions,
Yeah.
you would most likely get margin called, but it really depends on the broker. Whether you'd get margin called. It could be the following day.
What if you were up on those trades?
Same. It depends on the broker. They could call some of that back. And so each individual investor has to decide or contact their own broker to see what their margin requirements and stuff are.
Cool. All right. I'm going to go here to our YouTube chat. I see David. Hello, David. David says, Serious Logic, CRUS, is still flirting with an all-time high. Does the daily chart look like an inverse head and shoulders pattern to you? And how would you play it, if at all?
All right, here is the chart of CRUS. I wouldn't say that it's got an inverse head and shoulders pattern. I can see where you could kind of make a case for a potential inverse head and shoulders. Right here, shoulder, and then possibly a shoulder here. However, it's an upsloping, and you want a downsloping if it's an inverse head and shoulders pattern. So how I would trade it. What I would do is I would look for support and resistance levels. Right now, you've got this, and this is just me taking a look at it. You've got this trend line right here. And then you've got this trend line right here. So you can't really tell anything with that. However, you've got this upsloping trend line right here that you broke. So probabilities actually dictate that because you broke out, you're probably going to do a rounded top and then eventually flush out. So what you're looking for is you want to look for the support levels or the resistance levels. So if it continues higher, what you're going to see is that this right here starts getting taken out. If it starts moving up, takes out these levels, then you could possibly move higher, and then you're looking for a short at this upsloping trend line, okay? Now, if it breaks, you're looking for support. You've got this gap fill right here, you've got this other gap fill right here, you've got this gap fill right here, and then ultimately you've got this gap fill right here. So you've got a couple support levels on the way down, and as long as you don't take out this all-time high, the probabilities actually dictate that that the tops are in for this, and it's likely to roll over. So what you're looking for is a rounded top and then an eventual move down. So based on what the chart is telling me, that's what you're looking at.
Yep. Okay, so we have in our chat Mike Allison saying, how do you short crypto? You can use one of the, there are a couple exchanges that let you do that, namely Kraken and Bybit.
There's also like ZoomX, BingX.
If you're out of the country.
If you're out of the country.
Or you want to use a VPN. But
correct.
But we're not officially affiliated with any of these brokerages, so please do your own research.
That's right.
Since shorting crypto can be
extra dangerous.
Yeah, very dangerous. Okay, next question. Paul Stevens from our member dashboard.
What's up, Paul?
Hey, Paul. I look forward to your segment each Tuesday.
All right, cool.
Cruise line stocks are certainly suggesting they see no recession on the horizon. I was thinking about a short on RCL, but today's price action has me thinking a long position may be a safer bet, ? Can you provide me some technical perspective on RCL? Thank you.
I have some technical levels on RCL right now. So let me go ahead and do this. All right, so you've got the same move, right? So I was going over the Nvidia chart. It had this big run up. You put in a top, put in a low from August 5th, and now you've had this big rally. So I would say that your shortable level, I wouldn't go long on this stock. Your shortable level is 168.43, and that is an 886 fib extension. You've also got this red bar high right here that's just a little bit higher, and then ultimately you got double top. So this really depends on if you're swing shorting it or you're day trade shorting it. Day trade shorting it, this would be the level, would be the 168.43 for a pullback, and you're looking for a couple dollars, right? If you're looking for a swing short on this, this could possibly be your first level. Your add level could be at double top, and then any close above double top on a daily basis, then you just stop out, and then you would just wait for another level. So that another level you'd probably see is you take this pivot high, draw a line right there, and you're probably coming up to this upper level right here, let's say about 185. And I'll actually draw that line in there for you guys, so that way we can see exactly what we're looking at. Draw a trend line here, take this high, and then when it gets up to that level, it'll probably be right here. So you're looking at, yeah, about 185, 184.50. So that's what I would do. You'd short it here, your first level, second level here, remove it, and then re-short it at 185 on the upsloping trend line.
Okay, cool. All right, a couple more questions here that are a little easier to explain. So JD says, how do we tell whether a stock or commodity is hitting against a trend line to break it or reverse its direction? An example is natural gas between the 11th and 20th hitting resistance multiple times before rejection. Other times we see this happen and the support/resistance line is broken.
All right, so here's the natural gas chart. You're looking for the amount of times it actually hits. So for example, it hit here, it didn't break, it hit here, and it broke. Usually it doesn't break on the second hit, and so this might have been a fake out. Now it's underneath it, and so it's hitting on it again, and then you're looking for another hit, and then probably one more, and that's when you're going to get your blast off moves. So the more a support and resistance level is hit, the more likely it is to break. And so right now, although it does signal that it should break out, it's not, because that is significant resistance. And if we zoom out on the charts, we can see why this is significant resistance, right? So you go back and you've got all this price action right here. So you know that this is significant resistance. It got above it. It tried to stay above it, but it was just such strong resistance that a couple times it tried to get above, and now it's below, and now it's stuck there. So you're going to have to wait a couple more times before it clears out all that resistance, and then once all that resistance is cleared out, then it can move higher to the upside.
Okay.
And I guess it would be the same thing on the downside too, right? If you hit on this, hit on this, hit on this a couple times, right? All of a sudden, now you've got this move down, it broke, and now you're stuck below it again. So just wait for a couple hits.
Yep. So Upriver Rafting asking, how do you know that there's heavy short interest on a stock? I know there's a couple websites like I think Market. Let me take a look here. There's Fintel. There's also, which is what I use, Fintel.io. There's also MarketBeat.com, Benzinga, like a bunch of different sites tell you what the short interest on a particular stock is.
Yep.
Next question. Crypto. All right, Jazz says, what are some great books on trading that can help traders at any level? Maybe suggest one for beginners, intermediate, and expert. Thank you, jazz. And before Ben speaks, I just want to say that we recently, actually just today, and I haven't had a chance to promote it yet, but just released a new area called
Beginning Trader Series.
Not beginner trader series. We have Apprentice Trader Library, which is a YouTube series on the Verified Investing YouTube channel, talking with a bunch of easy lessons for you to learn in 2 to 3 minute videos. And I believe on our website we just released an educational section. We actually wrote a book for beginner traders talking about the different types of things, everything from what a stock is to choosing a brokerage to shorting or going long, day trading, swing trading. So you check that out. As far as intermediate and expert level trader books, do you have anything, Ben?
I haven't read any books on the stock market. What I've done was my own studying of the markets myself based on the education that I've had from Verified Investing. So that is going to be the core of the education that I would say is necessary to become like more of an expert trader. So there's a lot of books out there that they fill the pages with kind of, I wouldn't say useless information, but it drags it out instead of like really diving in and getting to the point of what you need to know. And so I don't have any books for you on that, on the education, because what are you going to do? Look at a candlestick book? You don't really need to know the candlesticks, what the different candlesticks mean, or what this is a spinning top. It doesn't really matter. You just need to know it's a narrow body bar at a time count. And so you can dictate the probabilities based on the education that is provided, a lot of it, on our website.
Cool.
So
yeah, and I just want to say that our recently released Traders Resource Center is what I was talking about. On it, I'm actually on the website right now. You can look at, let me see if I can see my screen. Yeah, you can see our new book, Stock Trading 101. We have a webinar talking about the top 10 mistakes by traders. We have all this, great education that's free for all of you. We have charts and, as well as the Apprentice Trading Library I was talking about earlier. So definitely go ahead and go check out our Traders Resource Center. I think it's really amazing.
So let me get back to that. I would say if you're going to read books, I wouldn't necessarily read books about the stock market. I would read books about human psychology. The whole understanding of the stock market is fear and greed, right? So when you're in a trade or when you're not in a trade, it triggers some emotion. And each candle represents that emotion inside of it. And so really big candles is a lot of fear, of a lot of selling, a lot of panic. And so there's a lot of buyers inside of a red bar candle who are stuck facing that fear. And then when it gets back into that red bar candle, if it's a large enough red bar candle, those people were so panicked because the stock was so down that they're willing to do whatever it takes to get out for a break even. And so really it's a psychological thing that I would say it would be more of a study, and a study on yourself and the psychology and the emotions that you go through, because the things that you're going through are what everybody else is going through. And if you can minimize that, then you can have an edge in the markets. And then the education that you get, it makes a lot more sense on why certain support and resistance levels actually work tremendously.
Yeah, and I just want to say that if you want, and I'm going to walk over here for this, if you want even more education, private education, you can go ahead and sign up for a private trading session with Ben Poole right here.
That's right.
Or one of our other amazing traders just on our website. You can book him for an hour. You can ask him all your questions, whether you're a beginner or an expert wanting pro analysis on a chart.
That's right.
He's got you covered.
Yep.
So book him.
All right, do we got any more questions?
Yes, we have a couple more questions.
All right, we'll give 2 more questions.
Okay, this is a big one.
All right.
From Christopher. Christopher says, hi Ben, in your opinion, what do you think it will take to make the market really fall? A recession would obviously make it fall, but with it being an election year, I can't see the Fed saying we are in a recession between now and November. The stock market seems to grind higher, besides the fact that the market initially had a bunch of rate cuts priced in throughout the year that never happened?
Wow, that's a great question. The stock market's going to fall when the stock market falls. I mean, the thing that I don't necessarily look at, hey, you know, this news is going to cause this or this news is going to cause this, because you're just getting caught up in the emotional side of things, right? And that's what everybody else is looking for. And usually when everybody else is looking for that, it's not going to happen. So what I do is I look at the charts. And as soon as I get a reversal signal, like a big top in a 40% drop on Nvidia, then I can see, okay, so this has given us some sort of a pivot. And then when price gets to a certain point, you've got some gaps. So as long as those gaps are significant enough resistance to push the stock market down or the Nvidia chart down, then I know that at least the top is in, right? Everything else is just going to happen. And if we continually try to rely on that and predict what was going to happen, then we'd be wrong more times than we're right. And so I would just say, just look at the charts, study the charts, look for reversal signals, breaks of trend lines and stuff like that. That's how you're going to get your information. That's how you're going to know the overall sentiment of the markets, not necessarily looking at like, okay, so there's this rate cut or this rate cut, because it doesn't really matter, right? The stock market's going to do what the stock market's going to do, and we don't have any control over that. So,
okay. The last thing, okay?
Last one.
Last one, okay? We're going to play a quick game, bullish or bearish. I'm going to give you a chart, and you have a minute to tell me bullish or bearish, okay?
Okay.
I'm going to give you 2 charts.
Two.
We'll do one at a time. All right. XRP, bullish or bearish?
Okay. Oh, I like this one. This one is short-term bearish, long-term bullish. So you didn't give me any specifications on
bullish or bearish.
So short-term bearish, long-term bullish. You've got this beautiful wedge pattern that goes back, well, on the lower end, March of 2020, and it's been hitting on this level 3 times. But you're staying in this wedge pattern. So here is my line in the sand. April, right around April 2025, you're going to see some kind of a movement if it doesn't break out before that. If it breaks this trend line, you're moving higher. You're going to move up to right around $1 or 93 cents. If you break lower, watch out below. I think you're going back down to right around 17 cents.
Okay, last chart, quickly.
Last chart.
GDX, bullish or bearish?
So basically gold. Oh.
Yep, there's no USDT.
No. All right. Bearish, just quick glance. You can see right here, you've got this huge up move and a break. So I'm bearish unless you can recapture this all-time high right around $40. Not all-time high, but the recent high of $40. Because you are putting in this bullish consolidation, which does favor the upside, but you've also got this break of this upsloping trend line right here. So you've got this upsloping trend line, but you broke. So that actually favors the downside move. However, you've got this bullish consolidation. And so if you can recapture this $40 level, then I think you're moving higher.
Cool. And that's
awesome.
all I got for you.
Okay.
All right.
Thank you guys so much for asking the questions. It's really fun for us to be in here interacting with you guys. Please keep in mind that this is for educational purposes only. Do your own research, and we'll see you next time on Financially Fit.
See you later.
Take care.
You're clear.
All right.